I'm interested, though, Robert, why you say that when this equity market crashes, that gold, silver, and Bitcoin are all going to crash as well.
Because it's going to be the biggest crash in world history. We have never had this much debt pumped up. Debt is the biggest problem of all, but that's called M2, money supply. And the debt to GDP ratio is out of sight. So when it comes down, which it brings everything down with it, but you can't keep printing fake money. That's M2. And the velocity of money keeps dropping, but the debt keeps going up. So you and I don't have to go to Harvard to understand that's not good.
Because you freaking pricks just can't ever be quenched. Your fantasies can't ever be quenched, can they? You freaking pricks! When will you learn? When will you learn that your actions have consequences?
Robert Kiyosaki, who you may know as Rich Dad, just warned of the biggest crash in world history that he believes will hit sometime in October. Kiyosaki has been a long-time bull on gold, silver, and cryptocurrencies such as Bitcoin and Ethereum. However, he believes a crash of this magnitude will drop prices in all markets. In this video, we're going to analyze why he believes a crash is coming and see if what he is saying has any truth behind it that investors should be worried about. One thing is for sure, the actions of the Federal Reserve is going to have colossal consequences. Make sure to stick around to the end of the video where we will go over all the latest Bitcoin on-chain data to see where the Bitcoin price is likely to go this month. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing to the channel or liking the video. It's free and you can always change your mind.
Well, I think it's already been triggered personally, because after I posted that market crash, the S&P 500 is really the S&P 7, and it's being held up by Treasury Secretary Yellen and Powell. So there's no correlation between the economy and what Yellen and Powell are doing. Now, I say one more thing, is that I'm a little strange in that I like crashes. So this next crash is going to be really, really good, but it'll bring down gold, silver, Bitcoin stocks. But the good news is a crash is a good time to get rich. So that's why I'm optimistic, and I'm very optimistic on gold, silver, and Bitcoin, not on stocks. The big debate is there inflation or deflation? And if you look historically, what's happened today is the nominal debt to GDP is a correlation of M2, the volume of money, times the velocity of money.
Right.
And the reason Yellen and Powell are scrambling is because they've expanded M2, so everybody thinks there's going to be inflation. But velocity of money, which is what Jim Records and I always talk about, the velocity of money is plummeting. People are not spending. So they pump all this money in, prices go up. Meanwhile, the Asians are catching up now. The ports are finally open. So it is transitory inflation. But the problem is we're stacked with this massive debt, and all it's done is bump up the stock market and real estate market. The money has not gone into the economy. That's the sad part. So the rich get richer, but the poor and middle class are getting poorer. It is tragic what's happening today.
So what sets this off? Do you anticipate that there won't be some kind of way to raise the debt ceiling come October 18th?
Well, they can do all they like, but I'll just say it again. It's M2, which is money supply, times velocity.
Right, but what's the trigger? What is the trigger that all of a sudden destroys investor confidence, which is already a little shaky at the moment when investors really look at the fundamentals, but what's the trigger that really shatters investor confidence in the equity markets?
Well, I don't know what it'll exactly be, but you can't keep printing fake money. That's M2. And the velocity of money keeps dropping, but the debt keeps going up. So you and I don't have to go to Harvard to understand that's not good. So they're just going to keep doing the same old thing. And meanwhile, that's what we're doing today is actually going to kill the economy too, because you and I are now on, let's say, Zoom, So technology is going to wipe out more jobs. Like, who's going to fly? Who's going to stay at a hotel? You know, I can now do more seminars in a day. You know, I did one the other day. I did a recording in Europe. I did one in the States, and then that evening I did one in Singapore. I don't climb on an airplane? So meanwhile, they're trying to keep these dead industries afloat, and somebody's going to say, hey, it cannot go much further, and it's coming this October because the velocity of money is now too slow. Savings are going up, spending is going down.
I'm interested, though, Robert, why you say that when this equity market crashes, that gold, silver, and Bitcoin are all going to crash as well.
This is going to be the biggest crash in world history. We have never had this much debt pumped up. Debt is the biggest problem of all, but that's called M2, money supply. And the debt to GDP ratio is out of sight. So when it comes down, which it brings everything down with it, that's when I'm going to be buying more gold, silver, and Bitcoin. The separation between the stock market and the economy has never been worse. You know, I'm just disturbed because the money is staying only in the investor market. Every time the Fed does something, the Treasury does something, only guys like me get richer. But the money is not going into the real economy. They're not investing. They haven't invested for years in plant and equipment. You see, every professional investor knows it's not when you sell, it's when you buy. So I bought Bitcoin at 6,000 and 7,000. So I'm just saying, I'm a pure capitalist. When markets crash, it's the best time to get rich. So I'm getting very excited about a crash coming because the better stocks will come available. Unfortunately, Michelle, there would be massive social unrest. That's what I'm more concerned about, because we have not reinvested. The Fed and the Treasury have only invested in the investor class. They haven't invested in the working class. And the working class is without jobs, without pay, without this. Their 401ks are going to get toasted. And that's why I'm more saying, I don't like what's happening. I mean, I live in Arizona. Our southern border is wide open. In Afghanistan, they armed the Taliban. And then they took our weapons, they gave our best weapons to Russia and China. And now the Taliban will use our weapons against our only ally in the region, Israel. Something really strange is going on, Michelle. So that's why I wrote this book a while ago. It's called The Capitalist Manifesto. We have to fight back against socialism and Marxism. So I remember in 2000, gold went down to like 300 or something like this. I thought I died and went to heaven. I just backed up the truck. So when Bitcoin went to, let's say, 20,000, I was going, well, that's kind of interesting. So when it backed down to 3, then rebounded to 6, I picked it up at 6, and it's 41 today. So your profits are made when you buy, not when you sell. So if you're worried about your position, you probably bought too high.
So you're holding on to your gold, silver, and Bitcoin, clearly. Do you think that after this October crash happens, that there'll be significant appreciation, a significant rally of all of those assets afterwards?
I believe so. That's why I started this whole thing. I am very bullish gold, silver, and Bitcoin, but I'm very anti-Fed and Treasury. And I think it's very interesting that Yellen came from the Fed. And let me repeat, Lennon, again, the establishment of a central bank is 90% of communizing a nation. That's in this book, Capitalist Manifesto. I think we better wake up because our academics, our school teachers, are Marxist. And I'm not saying that my poor dad was a Marxist, but he didn't know it. He's a good man. He's a school teacher. But he didn't know anything about money. Nothing. And so that's what they're teaching our kids. They're teaching woke, critical race theory. I don't know what else is, sexual gendering and all this. I'm going, hey, why don't you just learn to buy gold, silver, Bitcoin and be okay? You know? And I've been accused of being a racist so many times. And then I was accused of being a white supremacist. And I looked in the mirror and said, no, I'm still Asian.
Right. Yeah.
I'm a Marine.
So there is Robert Kiyosaki on why he thinks because of the outrageous federal debt levels and unprecedented money printing, we are about to see the biggest crash in world history. But is he actually correct? Well, in my analysis, I think this is absolute cap. Although Kiyosaki is speaking absolute facts, in most of his reasoning, I do not believe we are going to see a crash this October or likely anytime soon. First of all, let me just highlight some of the times that Kiyosaki has warned of a crash over the last 10 years. As you can see, Kiyosaki is constantly warning of market crashes, and as they say, even a broken clock is right twice a day. The reason I believe he is currently calling for a crash is because he just released his latest book, The Capitalist Manifesto. When Robert Kiyosaki warns of a massive crash, he gets a lot of media coverage and publicity and free marketing for his book because fear generates clicks and views. So, just something to keep in mind when listening to investing gurus such as Robert Kiyosaki. Two takeaways I do think Kiyosaki is correct about, however, is that crashes are the best time to get rich, and secondly, gold, silver, and cryptocurrency such as Bitcoin and Ethereum are the best hedges against inflation. These are two fundamental investing lessons I think everyone should understand. When fear is rampant and there is blood in the streets, it's generally the best time to be buying. When everyone is euphoric and everything seems to be going straight up, it might be time to look at taking some chips off the table. Anyway guys, that's just my personal breakdown. Let me know if you think Kiyosaki is right and we see a colossal crash in October, or if he's missed the mark in the comments. Now, just to show how bullish all the data is coming out from the on-chain Bitcoin analytics, but before that, today's video is brought to you by the channel sponsor, BlockFi, the leading provider of financial products and services for crypto investors. At BlockFi, you can put your crypto to work, earning up to 5% interest on Bitcoin and Ethereum and 10% APY on stablecoins. If you are a crypto holder like me, you may as well be putting your holdings to work and earning passive interest on your stack. BlockFi is backed by some of the biggest names in the industry, such as the Winklevoss twins and Coinbase Ventures. BlockFi has also recently released their BlockFi Bitcoin Rewards credit card, where you can earn 3.5% back in Bitcoin for all purchases in the first 30 days and then 1.5% thereafter. They also recently ditched their annual fee, and there are no fees to use the card. To start putting your cryptocurrency to work and earning interest, and also earn up to a $250 crypto bonus with a deposit of $100 or more, go ahead and check out the referral link in the description right down below. Now, back to the latest on-chain Bitcoin data. Out from on-chain analyst Willy Woo, we have an update on Bitcoin holdings in public company treasuries. We can see, coinciding with Bitcoin's big move back into the mid 50,000s, corporations are still stacking Bitcoin as fast as ever. We have really only seen 12 months of institutional Bitcoin adoption, and we already are seeing the result of a BTC supply shortage. Think of what this chart will look like 24 to 36 months into the future and what this will mean for the Bitcoin price. One thing is for sure, the last 3 months of this year are going to be explosive. Anyway guys, hope today's video provided you with some value. If you made it to the end, a like on the video would be greatly appreciated. I'll see you all in the next video, and as always, have a great day.